Assalamualaikum warahmatullahi wabarakatuh. We come from Group 4 will present consolidated entity and consolidated financial statement. Consolidated entity and consolidated financial statement. Definition: consolidated financial statement are reports that present the financial position and result of operation for the parent company or controlling entity and one or more subsidiaries or controlled entities, as if these individual entities were one entity or one company. Consolidation is required if one company owns a majority of the outstanding shares of another company. If the company is listed on the stock exchange, the majority of shares are outstanding in other companies. Then the interest rate of ownership is 50% and 10%. The company is required to prepare a consolidated financial report. Purpose: in order to provide an objective and appropriate picture of the overall position and activity of a single company or economic entity, which consists of a number of related companies. The consolidated financial statements are expected not to mislead interested parties and must be based on the substance of economic events too. Benefits: 1. Knowing the effect of the subsidiary entities on the parent company in the long run. 2. Provide the most up-to-date information to the parent company management team regarding the performance of its subsidiaries. 3. Provide information to outsiders who need it. Elimination. 1. Investation. The first, the investment account is eliminated with the equity of the subsidiary. Second, if the ownership in a subsidiary is not 100%, there will be non-controlling interest. The third, the difference between fair value and book value should be calculated in the consolidation or consolidation fair value. Fourth, goodwill arises when the cost does not equal fair value. 2. Account receivable rising between child and parent should be written off. 3. Transaction that may be recognized are transactions with third parties. Transaction for children and the parent must be eliminated. Elimination. 1. Inventory. The first, sales and cost of goods sold. Second, if the goods have not been sold, then the unrealized profit must be deducted from the inventory value and will affect the recognized profit. 2. Fixed asset. First, in the year the transaction occurs, no gain or loss is allowed from the transaction. Second, any gain on this asset should be eliminated. The third, the depreciation value will be adjusted accordingly. 3. Bond. The first, bonds can only be recognized and the amount of bonds to external parties. Second, interest income or expense must be eliminated.
Next, I will explain the overview of the consolidation. First, the process consolidation at the together financial statement of number of legal entities or companies spread, resulting in a single set of financial statement. 2. Several adjustment and elimination were made to prepare LKK. 3. Adjustment and elimination are made for account related to transaction and owner between a company. And 4th is adjustment elimination. Journal are only journal in the conciliation working paper. They will not be transferred to actually ledger within its company. So the conclusion is So the conclusion is the separate financial statement are combined or add together after adjustment and elimination to produce consolidated financial statement. This adjustment and elimination are related to transaction and entitlement between companies. The process are preparing consolidation financial statement will become a problem if the ownership of the subsidiary is less than 100%. Problem faced in preparing consolidate financial statement after two. First is the period in which the consolidated report is prepared. Two, the number are share owned by the parent company and the cost that has been issued to acquire these shares. Next, limitation of consolidated financial statement. Consolidation financial statement also have several limitations, including A. The company member financial performance that is not good will be covered because the result operation and financial statement of each the company are included in the consolidation report are not disclosed. The bad performance or position of more companies can be hidden by the good performance of the other company. B. Accurate preparation of the accounting through the company. Next, see the financial ratio based on the consolidated financial statement do not reflect the condition of individual because the financial ratio based the consolidated financial statement are computed on the basis combination information. They not respond any company that is being consolidate including the parent company. D. Some account can be completed compared. For example, account receivable. The same account of different company that are company consolidation may not all be comparable. Next, Rafki will be explained. Thanks.
So we jump to the next one. It is the illustrations. In 2019, B Company announced a profit in the financial statement of 200 millions and a dividend of 100 millions. Upon the announcements of the financial statements, A Company adjusted its investment value because the profit of the children indicated the development of the parents' investment. Meanwhile, dividends received are a deduction. So the next one is bookkeeping of A Company. Investment profit we got here 200 millions times 80%. So we got 160 millions. Next one is amortization in the difference investment. There are inventory overvalue with 280 millions rupiah, undervalue building with 40 millions rupiah, and the goodwill with 10 millions rupiah. So the total investment income become 390 millions rupiah. Journal of the A Company will be the investment in shares put in debit and investment income in the credit, with the total is 390 millions rupiah. So the next one is the dividend payable. You put it in the debit and the investment in shares in the credit with the 80 millions rupiah. Next ones we can see here consolidated balance sheet of the A Company subsidiaries. We got a lot here from the assets list and the liabilities list. So the total assets will be the same as the liabilities. It is 23,110,000 rupiah. So the next one we got consolidated income statements. We got sales 30 millions rupiah. The revenue from B Company we don't know yet, so we can put dash on it. Cost of the goods sold with 1,010,000 rupiah. Operating expenses with 550,000. Minority interest profit with 40 and the net profit within 900,000 rupiah. We go into the last one, consolidated retained earnings. There are some net profit. From the previous page, we got 900,000. The retained profit of the 1st January 2019 is 2 million rupiah. The dividends will be 400,000, and the last one is the retained profits of the 31st December of 2019. It is 2.5 million rupiah. So that's the last from me.